Hey, Gio, 5-Star Chevrolet, talking about credit score and how it affects your APR. The higher your score, the lower the APR you're going to get when you purchase a vehicle. A lot of variables that go into having a good score, but we'll touch some key factors. So, low balances on revolving credit, never miss a payment, or within the last 6 months at least, have good payment history, not a lot of inquiries, have a long term on the bureau. And so if you keep up with your payments and you pay good on time, the higher your score is going to be. And on the flip side, let's say your score isn't where it needs to be, but you need a vehicle. There's a ton of programs out there. There's a lot of lenders that are willing to help, and we can do that here. The rate's not going to be as favorable as you want, but I guarantee you this: you pay on time for a year, year and a half, your score is going to be much better than it was a year and a half ago. And my suggestion at that point would be trade the vehicle in, get a new vehicle at that point. You dump the old one with the higher rate, you get into a new vehicle, and your rate's going to be a lot better because you already have a year and a half in history. Now, let's say you don't want to trade it, but you really love the car that you bought a year and a half ago. Another good thing that you can do, and it's something that's on a law contract in the state of Texas, it's all contracts are written as simple interest. What that means, you can pay ahead to reduce penalty. So an easy way to do that is, here, let me show you this. All right, so let's say you took out that loan for 6 years, right? And then your payment is, let's say it's $4.99 a month. Now you're going to pay this payment 12 times a year, just like any other person, right? So you make 12 payments a year, but you really love this car, you really want to keep it. Well, let's just say that you got 9% APR. If you take this loan and you pay over the course of 6 years till the very last payment at the $4.99, you paid the bank a finance charge equaling, let's just call it X right now, right? But there's many things you can do to avoid penalty. Here's my favorite one. Can you make an extra payment once every 6 months? It'd be fair to say that most of you can, right? And let's just call it June, and in October, you make another payment of $4.99. So in that year alone, you made 14 payments instead of 12. Now watch this. This is awesome. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. In the course of 5 years, you took off almost a whole year from that loan. Now let me ask you this: the 9% of that last year, how much do you think you paid in interest? The answer is 0%. You paid 0% on this because that 9% cannot touch something that doesn't exist anymore. And now you paid off this loan in 5 years and 2 months and saved yourself almost a year. So my encouragement, whether you have excellent credit, decent credit, or bad credit, is to download an app for TransUnion, Equifax, Experian. They all have one. Or you can do a third-party vendor site. But you need to be able to monitor your credit and keep up with it. And for your millennials or Gen Z generation, treat it like a video game. Look at it every day, get encouraged to get that score up, play with it. There's a ton of information on those apps, and we'll see you on your next car purchase.